$1.2 trillion in a single quarter. The Megadeal is back and it is wearing a giant AI hoodie.
Deal volume is actually down 17%, Nate. They are just writing much bigger checks for hyped-up assets, including Ben Affleck somehow.
Hey, Affleck selling an AI startup to Netflix is peak 2026. Respect the hustle.
I only respect the footnotes. Speaking of which, Intel just spent $14.2 billion to buy back half of its own Irish fab. The math on this structure is wild. The rundown?
Volume is down 17%, but deal value is up 26%. You don't need to be a math major to see what's happening here.
Fewer deals, way bigger checks. We just crossed $1.2 trillion for the first quarter. 12 mega deals in 3 months. That's just absurd.
It's the AI arms race meeting improved financing. Banks are finally opening the taps again. Just look at the infrastructure space. GIP and EQT teaming up to swallow AES Corp for $33.4 billion.
Classic club deal. I'm waiting for the syndication details on that financing to drop tomorrow because that much debt is going to leave a mark. But speaking of massive numbers, Unilever combining its food division with McCormick, $44.8 billion.
The spice must flow, Maya.
Very funny. But seriously, the antitrust regulators are going to have an absolute field day with that one. You're putting way too much supermarket shelf space under one roof. I'll be refreshing the database tomorrow for those early regulatory filings.
Oh, regulators are definitely drafting the injunction right now. But look, my favorite headline today isn't even a mega deal. Ben Affleck sold an AI post-production startup directly to Netflix.
Wait, really? Ben Affleck? Like Good Will Hunting Ben Affleck?
The very same. Apparently, he had a tech play going on the side and successfully cashed in on the AI craze.
That's amazing. Almost as wild as Paramount Skydance finally winning that brutal bidding war for Warner Bros. Discovery. Media consolidation is just a flat circle.
It really is. Speaking of circles, Verdi Partners just led a massive $1.7 billion risk transfer with Klarna. Standard balance sheet optimization. Buy now, pay later takes a lot of capital, so they're just freeing up capacity.
Oh, come on. A $1.7 billion significant risk transfer is not just routine housekeeping. That's Klarna shoveling their ugliest consumer credit risk off the books, so they look pretty for the public markets.
Or it's just smart treasury management. You always assume the worst when you see the words risk transfer.
Because the footnotes always prove me right. If you look at the structure, Verde is definitely demanding a massive premium to take on those tranches. It's risk offloading dressed up as a financial product.
We'll see who's right when the quarterly numbers drop. But we really need to talk about the biggest flex of the quarter. Intel spending $14.2 billion to buy back a 49% stake in its own Ireland fab joint venture.
The ultimate corporate do-over. I pulled the original joint venture agreements so I can show you exactly how much this reversal is costing them. The big one.
$1.2 trillion in a single quarter. I had to refresh my terminal 3 times because I thought the data feed was broken.
It is not broken, but it is heavily skewed. If you just look at the headline number, you think the whole market is throwing a massive party, but transaction volume actually dropped 17%.
Right, fewer deals, but the deals getting done are absolute monsters. Deal value is up 26% year over year. We had 12 distinct mega deals announced in Q1.
Which brings us to the most perplexing one of the bunch. Intel writing a $14.2 billion check to buy back the 49% stake in its Ireland fab joint venture.
Perplexing? It makes perfect sense. They are consolidating control over their most critical European manufacturing asset right in the middle of a massive AI arms race. It is a strategic flex.
It is an expensive round trip, Nate. They spun that stake out when capital was tight, and they were desperate to fund the build-out. Now they are buying it back at a premium. If you read the original joint venture agreement, the call option mechanics heavily favored the financial sponsors. Intel paid through the nose for this.
I am going to push back hard on that. You are looking at this like a private equity associate hyperventilating over IRR. Intel is playing a geopolitical game. Financing conditions improved drastically this quarter. They had the window to reclaim full ownership of a top-tier fab facility, and they took it. The market is rewarding capacity right now, not capital efficiency.
I disagree that the market ignores capital efficiency when the check is over $14 billion. But I will concede that the AI panic is making everyone do wild things. We have infrastructure guys acting like tech bros. GIP and EQT are dropping $33.4 billion on AES Corp.
The grid needs power. AI needs the grid. Ergo, infrastructure funds buy power companies. It is the most logical trade on the board.
Logical? Sure. But $33 billion is a massive pill to swallow. Everyone is just slapping the letters A and I on their pitch decks to justify these multiples.
Hey, it works. Hollywood is getting in on it too. Ben Affleck just sold an AI post-production startup directly to Netflix.
Wait, really? Batman has an AI startup?
Had an AI startup. Past tense. He just cashed in on the tech craze. I respect the hustle. The guy knows how to read a market cycle.
That is entirely ridiculous. But speaking of things that might be ridiculous, we cannot ignore the consumer megadeal. Unilever combining its food division with McCormick.
$44.8 billion of mayonnaise and garlic powder, the grocery aisle monopoly.
Exactly. And if you think Intel's fab deal was complicated, wait until you see the regulatory filings on this spice merger. Antitrust regulators are going to have an absolute field day with it.
Which is exactly what we need to talk about next. How exactly do you convince the FTC that controlling all the mustard and the black pepper is not a monopoly?
I have a few theories on how they will try, and exactly why it might blow up in their faces. Voices. So the consensus from the analyst desks this morning is basically, volume is down 17%, but value is up 26%.
Which means the mega deal is officially back. We broke $1.2 trillion this quarter, and everyone is pointing to the same two things: better financing conditions and the absolute arms race for AI.
See, I read those same analyst notes and I completely disagree with the AI narrative.
Oh, come on, it is an arms race. Look at the premiums.
I'm not saying AI isn't a factor, but calling this an AI boom ignores the actual data. We had 12 mega deals this quarter. Are you telling me Unilever buying McCormick for $44.8 billion is an AI play? Is mayonnaise going to write my emails now?
Okay, fair. Spices and mayo are stubbornly analog.
Exactly. And look at the massive infrastructure deals. GIP and EQT teaming up for AES Corp. That's $33.4 billion of pure power and grid assets. Even the capstone of the quarter, Intel buying back the 49% stake in its island fab for $14.2 billion. That's concrete and silicon, Nate, not chatbots.
Sure, but why do we need all that power and silicon? To run the data centers for the AI models, the infrastructure is the AI play. It all traces back, though I will admit the AI label is getting slapped on absolutely everything. Did you see the Hollywood gossip?
I try not to.
You're going to love this. Ben Affleck just sold his AI post-production startup directly to Netflix.
Wait, really? Ben Affleck? Like Goodwill Hunting Ben Affleck?
The very same. He's cashing in on the tech craze. Forget Paramount Skydance finally winning the bidding war for Warner Brothers Discovery. Affleck is the real M&A mastermind here.
That's amazing. I desperately need to read the footnotes on that deal. But speaking of things we actually need to read the fine print on, we should probably talk about what's hitting the regulatory desks tomorrow morning. Spill the tea.
I'm just saying, you have to respect the pivot. Ben Affleck, tech founder, he timed the AI bubble perfectly.
Oh, please. Calling it an AI post-production startup is doing a lot of heavy lifting. I read the filings. It's basically just an automated script for color grading and dubbing.
Netflix bought it. Direct sale. Don't hate the player, Maya. He saw this $1 trillion quarter happening and wanted his piece.
Netflix just wanted the press release, or maybe they're just desperate to automate away their editing costs. But honestly, the real Hollywood drama isn't Affleck cashing in. It's the Warner Brothers Discovery bidding war finally ending.
Paramount Skydance takes the crown, which means David Zaslav finally gets to exit stage left.
With a golden parachute that probably requires its own zip code.
Hey, as a recovering banker, I salute the sheer audacity of that advisory fee pool. Paramount Skydance swallowing WBD is peak media cannibalism. It's like two people on a sinking ship fighting over who gets to wear the captain's hat.
A sinking ship with a massive dead anchor. I'm looking at the combined balance sheet and it is terrifying. They're going to have to spin off so much IP just to service the interest.
but they get Batman.
Great. Maybe Batman can underwrite their high-yield bonds.
You are so cynical today. First you go after Ben, now Batman.
I just prefer deals that make actual financial sense. Which, speaking of things that might not make sense to regulators, we need to talk about mayonnaise and mustard.
Oh yes, $44.8 billion worth of condiments.
Unilever slamming its food division together with McCormick. The antitrust lawyers are going to have an absolute field day with those early filings tomorrow. Tomorrow's radar. I'm setting an alarm tomorrow just to refresh Edgar for the Unilever and McCormick filings.
$44.8 billion for mayo and paprika. You think antitrust actually cares about a spice merger?
Yes! Look at the grocery consolidation data. They absolutely care about shelf space monopolies. I need the exact market share overlap from the footnotes, not their PR fluff.
Oh, come on. The FTC isn't losing sleep over Old Bay seasoning. I'm watching for the syndication drops on GIP and EQT buying AES Corp.
$33.4 billion is a massive infrastructure check.
My old banker senses are tingling. Some poor associate is completely losing their mind over those debt term sheets right now.
I just want to see how much of that paper they actually managed to offload in this market.
We'll find out tomorrow, but speaking of cashing massive checks, we have to talk about Ben Affleck selling an AI startup to Netflix.
Hollywood tech bros, we'll get into that right after a quick break.